Welcome back, and joining us for a look at the day's markets action is Caroline Cremen from Adviceworx. Thank you so much for your time, Caroline. Now, of course, trading is thinner today because the U.S. markets are on holiday. But the JSE is actually looking good. It was only really one session where the JSE was trading in the red, and that was on Tuesday. Could the second half be looking like it is off to a solid start, a good start?
Look, it's definitely, like Foy said, markets do not like uncertainty. So now we've actually created certainty. We know who the cabinet is going to be. We're kind of getting a sense of where the budget is probably going to go. So I think everyone's taking a nice sigh of relief that hopefully there's no drama in South Africa's future, at least for the next 6 months, please. And then we can actually see some of these undersold, oversold sectors that we've got actually start to pick up. So maybe this is a trend.
Talking about picking up, there's actually been some interesting moves that I've seen on the retailers, because the food retailers have definitely picked up today. I saw Pick n Pay and Spar up over 2%, but the fashion retailers have actually been under pressure for the last two trading sessions, noting Truworths and Mr. Price over there. And I'm wondering what exactly is happening. Are the food retailers just looking too attractive to pass up, and maybe they've just been the ones that have been beaten down so much that that's where investors are focusing on right now?
I think the whole retail sector is kind of depressed, probably apart from ShopRite. It's
Yeah.
difficult to actually tell, especially in the intraday moves, or even for week moves. It's maybe possibly we've got a clearer line of sight for rate cuts later in the year affecting it. Maybe the rand is an issue for the apparel retailers. A bit of imports, maybe a little bit more cheaper than expected. And then it could simply be foreigners purchasing. I mean, just shortly after the election, we saw foreigners kind of dip into Clicks as usual, ShopRite as usual, but also the Foschini group. So maybe they're looking at other counters now as well. I think what is also kind of nice for your food retailers at this point is that we've definitely seemed to have gotten a handle on load shedding.
Okay.
It's extremely positive for food retailers because, I mean, of the amount of diesel they would have needed to spend to keep their fridges and things running. So maybe just that load shedding portion is what is actually driving the positive return there.
Well, talking about load shedding, I actually noticed in a sense today that the PIC has actually increased its stake on Roynet from 14.19% to 16.43%. I mean, I remember last year when we were having a severe load shedding, Roynet was actually one of the darlings of the JSE. Is it still attractive considering now that we actually have less load shedding?
Well, I think it is attractive because we have less load shedding, but the reality is that you still do need to maintain. And we know we've got a backlog of maintenance in all of those areas. So hopefully now that we've got our senior leadership better down and we've got the provincial leadership kind of better down, these guys can actually start to get down to, brass tacks and actually start to do some of the fixing that they've left kind of by the wayside for the couple of years. Veroina is a definite beneficiary there. But also, I think the PIC, being a little bit smart, is that if South Africa income becomes more attractive, maybe some of the mid caps are going to become more attractive. And Reuters is simply an attractive mid cap as well. So they're going to kill two birds with one stone. I think it's probably a good move.
All right. We're talking about, that part of the market that has, these smaller companies, small and mid-cap companies. Rainbow Chicken. It also put out a sense today, well, just letting us know that Remgro has an 80% stake in it, and Manji Investment Managers has over 5% of the shares. I mean, just on that stock, it's been trading now for 4 sessions, and I remember on Monday when it first came online, it was trading at 5 Rand, but now it's kind of remained rooted at that kind of 4.50 level. What do you make of this listing, but also how it has performed this week so far?
Yeah, I don't know what to make of the listing. I don't know why they listed, especially if you're going to have such a small free float. And unfortunately, when you've got such a small free float, the price movements are going to be, extreme. It's really unfortunate.
Yeah.
I used to work with a guy who, if he's watching, is going to laugh when I say used to say, don't never trust the chickens. It was like his way of saying, don't invest in chickens. And it's a difficult business.
Yeah, true.
There's bird flu, and then some of these things don't hatch, and then you've got Brazilian imports being dumped. So I question the rationale for listing.
Yeah. No, I hear
Would
you.
not
I
be
hear you. Yeah, it is a cyclical part of the market. But yeah, we'll just have to see how it performs in the next
Yeah.
few months. Caroline, let's get to your stock pick for today. What are you picking?
Okay, well, something I wouldn't necessarily buy today. It is the iShares Semiconductor Index. The share code is SOXX. If you have kind of missed the NVIDIA bubble, this is a nice way to access that whole semiconductor sector. This ETF does have 8% in NVIDIA, but it's also got 4% in Taiwan Semiconductors. It's got AMD and all of those other things as well. Be cautious about buying it now because it is a very, very cyclical sector, and with the sector very hot at the moment, leading up to the US elections, you might get better opportunities to buy it. But it is a nice sector to access that semiconductor sector in a more diverse way, because you've got a lot of companies as opposed to putting your money on just one, which has run a lot. There's a lot of value in some of those more unloved companies, and I do think that they will kind of reach that value in the years ahead. So this is a safer way to do it. Not today.
All right, all right. Maybe another time. But thank you so much for flagging that for us, Caroline. Really appreciate your analysis today. That was Caroline Cremen from Adviceworx.